Talk about your first investment when you first started working. Where did you?
My first investment was a SIP, and that was a good learning for me. So what do we do with the income is where SIPs played a good role because I could allocate a certain amount of money to that SIP every month.
So roughly, what is the split of your portfolio between stocks, bonds, and real estate?
So about 20% into bonds. I would say about 30% into real estate. Close to about 40% into 35% maybe into equities. So my family's been in the milk business for over 80 years. And that way, if you know how milk operations used to happen, because of it being fresh, the distribution chain starts at 4 a.m. so that people get milk at their house by 6:30 a.m.
Right.
So it's a very tight window.
So how many startups have you invested in through the family office?
Yeah, before the waves started and hype started. I am yet to reach that stage of that size of a balance sheet. We are fairly modest in the way we allocate capital. And I think we still function like a conservative, money-minded business rather than a valuation-minded business. So those cultures are something that are very different for me. So while I love investing and understanding how VCs are investing.
Hello and welcome. This is Neil Borate. I'm Deputy Editor at Mint. And my guest today needs no introduction. Indraneel Chitale, somebody who runs and owns one of Pune's oldest companies and a brand that is now nationally known, Chitale Bandhu. And today we'll talk about how he manages his company and how he manages his personal finances. Welcome, Indraneel.
Hi, Neil. Pleasure to be here.
So, Indraneel, my first question to you is, do you work 70 hours a week?
Well, it's a controversial question, but I think as a business owner, I wouldn't mind working 70 hours a week sometime if necessary. But I do put in an effort where I do spend maybe close to about 45 to 50 hours a week.
So you get up really early, right? I think at 4:30 or 5 o'clock.
Yeah, around 5 a.m.
And you said that's the latest in your family, like you're among the latest risers in your family.
So my family's been in the milk business for over 80 years. And that way, if you know how milk operations used to happen, because of it being fresh, the distribution chain starts at 4 a.m. so that people get milk at their house by 6:30 a.m.
Right.
So it's a very tight window. And at one time, there was no professionalization in the business. So everybody used to get up, and that is how the daily schedule was for my family. So yeah, whenever I say that I wake up at around 5 in the morning, my father's up still earlier than I am. And that's been the norm in the family as well.
So Indraneel, the second criticism that I'm going to throw at you, you made me fat. In fact, you made Punekars fat. But you're reorienting the business now towards health food. So can you tell us about that?
Yeah, I think what we've come to realize is that people are going to keep consuming food. It is up to the food brands to be responsible about what they offer their consumers. So if there is a mechanism where food brands, with the help of all the new emerging technologies and past historical data, actually make food that is more nutritious, that is something that we would like to spend our energy and our resources into. And that's what we've been focusing on. And, part of it was that last week we launched our entire millet range, which is on breakfast and also on the healthy side. So, you can indulge into food which is nutritious or sweet. And that's a choice that we want to empower our consumer with.
So kind of competing with MTR on the breakfast side, or?
So there are a couple of brands who are doing breakfast, but what we've been focusing on is on ready to eat, not ready to cook. So what we want to try and bring into the market is the ability to be instantaneous about consumption. So whenever you want to consume something, you don't need to take one more intermediary step to get the food ready. It's all about just opening up the packet, heating and eating it. That's it. So yes, MDR is a competition, but there are others also. But the biggest competition is the street vendors who we compete with because they serve hot, fresh food, which is a challenge when packaged.
In fact, in one of your interviews said that your biggest competitor is the Kamwali Bai.
That's true. I think, so when it comes to ready to eat, that also gets into the meals segment. And that way, the cost of cooking meals in India is relatively still very cheap. We have access to resources which are very economical. And that way, if we want to really replace the meal, we need to replace the cost of that meal as a whole. So that's where I think the Kamwali Bai is the biggest challenge that we have to overcome. But I don't think so. We wish to compete with them. We just want to, make their job easy, where if one day they want to take a weekly off, that is the day when we want to serve the meal to the consumers.
Yeah, there's no winning against the Kamwali Bai.
You can't.
In fact, I'm one of your target consumers because I don't know how to cook. My cooking is limited to scrambled eggs and I keep ordering out from restaurants. So going back a step, can you take us through your career? You're an engineer by education. You joined Chitale Bandhu in 2011, I believe. So 12 years now. Can you take us through it? How your role has evolved?
Sure. So I did my electronics engineering. Then I got a chance to intern with a German company called Kia Foods, where I spent a good amount of time managing projects. And after that, I joined full time in 2011, where the idea of joining the company was about handling projects. So my prior expertise was something that put me into that seat where we had two live projects going on. One was a greenfield project that was being built, and the other was a upgradation project that was happening where there was a lot of machinery and equipment to be installed. Considered that I had some experience in it, which I thought I knew, I was put onto the ground and actually entrusted with the responsibility of bringing those projects up. It was a great learning experience because I realized that in our country the way things get done is very, very different compared to what Germans handle their projects, and it's a lot about aligning people here rather than aligning processes. So that was a big change, but I think what I got to know out of it was that you need to build great relations with people to actually get things moving. And if we are able to do that very well in our country, I think we can be faster than most other powers, which is what we are seeing in the last 5-6 years, where we're just leapfrogging the way we harness technology with the right people skills.
Right.
So that's where it started. I think from there, I was interested with another project, which was again a greenfield project, which was into packaging. And with packaging, that was a big change in the style we did business because majority of our business was through the stores, which we ran as a family. So while we had franchised all of those, we actually wanted to get into the distribution chain, which was a challenge because while we could package, the customer was not ready to see us as a brand into that marketing zone at all. So building that market was where, I eventually got responsible for the P&L. I eventually started realizing how to do sales, how to do marketing, how to do the legal, how to do the distribution channel, how to do the people management in terms of the distribution channel. And that's where, that became a good enough sizable chunk of the business where I was interested into the responsibility of managing the whole balance sheet eventually. Where now I look after the product business, which is known by the name Chitale Bandhu, and where, we are a omni-channel business where we do retail, we do distribution, we do modern trade, we do e-commerce, and we do exports.
And somewhere along the journey, you started the family office. Can you tell us about that?
Yeah. So I think when we were doing all of these transitions, the big question was about managing tax efficiency, and secondly about management of assets which were family held, which were now being put into a mechanism which was more professional, even though it is still family held. So during that transition, I got to exposed to a lot of consultants and people from the Big Four as well, who specialized in these kind of maneuvers. And it was a maneuver which was sequential, and that was something that I genuinely enjoyed. And that is when we realized that there was a reasonable amount of capital in the treasury that could be deployed to a far better usage if we didn't want to invest that into the company, and where the returns of that can be pegged at a good market comparison. And actually, we are able to create wealth in a parallel channel, which is not only in the company. So how do we do that is where informally I started paying attention. I had a bunch of people who guided me around this, some who were running other companies and also building their family offices or just maturing into the zone of having a family office. And that caught my attention, that caught my love, and that's how I got into it. And where, we ended up doing a considerable amount of investments where we've exited at a good delta as well. And also we continue to do that where we see potential acquisition targets, potential merger targets, potential new avenues of business opening up through these, and also learning the agile culture of startups into a traditional company that we were.
So how many startups have you invested in through the family office?
So we have invested in about 11 startups. We've exited 2. We're in process of exiting one. One is in process of getting acquired. So that is where our energy is focused right now. And we continue to be holding good positions in 8 of them, spread across diverse portfolios.
And this was a long time ago, right?
Yeah, so this has been over a period of about 5 years, 5 to 6 years.
The past 5 years?
Yeah.
Before the crazy startup wave?
Yeah, before the waves started and the hype started. I am yet to reach that stage of that size of a balance sheet. We are fairly modest in the way we allocate capital. And I think we still function like a conservative, money-minded business rather than a valuation-minded business. So those cultures are something that are very different for me. So while I love investing and understanding how VCs are investing, that's something that I would rather invest with rather than be a VC myself.
Normally, at what multiples do you exit? Like, what is good enough that you think?
So I wouldn't say a multiple is just a great mechanism for it, because it also depends on the period of time and also the impact or the ticket size of it. But what I've seen is that, it's more about the way you allocate capital and what is the return you expect on that capital. So if you are anywhere closer to what Nifty is trying to do, or beating that ideally, or in that zone which is plus or minus, I think I consider that to be a good enough job. Anything that is exponentially bigger than that, the risk is also high. Where at a family level, I try to mitigate that as well. And as I said, we are fairly conservative on what to expect about it. But there are benchmarks that we set, which I think the capital should be coming in better, because otherwise we would rather be invested into the market directly.
So that's you're thinking at a portfolio level, that your startup portfolio should do better than the Nifty for it to succeed.
Correct.
Is it?
So not the startup portfolio, I would say. The family office should be doing better than that.
Right.
Part of it is the startup. So since we've invested into a couple of startups, I think we've done whatever exits we've done better, far better than that. They were aligned better. I'm hoping the third one also continues to be in the same trend as to what we've done based on the numbers I've seen. And I think we'll continue doing that. The risk profile here is slightly higher, but that's balanced with other investments that we do as a family office.
Right. So startups is a very small part of the...
Well, it's a good about 20-25% of the capital that we allocate.
And the rest you do public markets or do you do debt?
Debt, public market, next profile around it. And, we've over the period minimized the debt exposure.
Acha.
And I think we are all seeing what the returns on the equity have been. So that way, I think I don't have any complaints in terms of what we've been doing with the portfolio.
Any number for return?
Well, far better than what you are seeing right now in terms of the indexes.
Far better than the Nifty. Now let's talk about your personal portfolio. Talk about your first investment when you first started working. Where did you? Yeah.
My first investment was a SIP, and that was a good learning for me, because coming into a family business, while we had a stake, it was too small for us to do anything about it, and the compensation would come at the end of the year. So that way, throughout the year, there was nothing that would actually come into the pockets. So then I made a deal with my father that, why don't you pay me this much amount every month, because that helps me manage my expense a little better than how you've gone about doing things. So then, there was a steady income that was coming every month. So what do we do with the income is where, SIPs played a good role, because I could allocate a certain amount of money to that SIP every month. And I think that was a good discipline, which I continued for about 2 to 3 years. Then, I got a promotion internally where I think the money I was making was a little better than what I was making in the first 3 years, where I could allocate more money towards getting invested into the markets as well. And also not just market, but I also invested to a certain extent reasonably well into real estate, where I think a lot of my understanding on real estate has been because of few friends who've been in the real estate sector, and my father, who happens to be, somebody that I look up to when it comes to investing into the real estate, because the kind of deltas that he has generated over his entire lifespan is something that is, phenomenal, what I consider.
Mm-hmm.
So that way, it's been a mix of real estate. It's been a mix of, the markets and also the startup world, where, the exposure in one sector is never exceedingly high compared to the other. And that at an insulated level has led to a good enough IRR, I would say.
With real estate, do you think it's a lot to do with our luck that we are Punekars and Pune has seen a massive boom in real estate?
I think that boom is not something that I could witness too excessively. Because when I actually started making money of my own, the market had already peaked to a reasonable level, where I think if you see the last decade, we've not seen an exponential change in the cost of real estate. So it was more about investing outside in markets which you thought would be emerging and which would do well, and which eventually say how the development plans have came up, how the new extensions of the city limits have come up, is where I think you can make the delta. If you're investing, so what I've seen with real estate is that if you're investing, don't invest from a point of view that you want to stay there. And if you want to stay there, then don't look at it as an investment, look at it as a point where you're going to consume that real estate. So if you don't want to stay there, go a little further away. Soon it will be part of the city, and that is where you make money. That is where, that has been my very simple thumb rule around it.
And do you use measures like rental yield to figure out that, okay, this is...
So we do make it a point, simply because, especially in commercial or residential real estate, that is a good enough factor to consider. I think the yield on the commercial side has been better. Residential wise, it is a hit or miss, I would say. And it's got a lot to do with the type of real estate that you're investing into, and the societies and the ever heightening maintenance costs, which are eating into the returns there. So I am now very in terms of investing into those type of real estates.
Residential particularly.
Which unless I don't want to consume, I don't want to invest.
Yeah. So roughly, what is the split of your portfolio between stocks, bonds, and real estate?
So about 20% into bonds. I would say about 30% into real estate. Close to about 40% into 35% maybe into equities. And remaining is what I dabble around with mutual funds or startups.
And do you invest directly into stocks or through mutual funds?
No, directly into.
Now, how do you pick your stocks?
So I have a fairly good enough advisory team around it. We have an internal person who's also tracking all of this. I have also built a good enough peer group around it where we talk about it, where every day we are just discussing certain portfolios, which is about 10-15 minutes a day, but it's worth the time, which I've come to see as an investment. And of course, good advisors who do this as a full-time job, where I don't mind giving a certain commission to them just to be right. So I wouldn't say I am extremely selfish on that factor that I am the smartest person there. I do listen to what other people are doing and, take a position around it.
When you discuss it in the group, do you feel a lot of FOMO? Because always people will be saying that, oh, this stock did so well.
No, I've never felt that. And what I've also seen is that, all the wiser investors, I don't think so. They are always into that trading mode.
Right.
So it is a lot about, what they see as a, opportunity in the future, which is where, getting in at the right time is where the value is to be created. So I have not seen that kind of bragging happening around in that circle either. Neither have I seen that idea that, somebody's creating a FOMO that, I made so much money.
Right.
Of course, there are certain times when, something just booms and you just don't know about it.
Right.
But that's there. But I think that's just somebody doing better research than you do.
How about gold?
Well, I have not had a great relation with it. In the sense that I do not see it as a great tool to be focused on. It is good to have, but I don't think so obsessing about it is a great idea. And I think my father's generation had a very different viewpoint towards it. And often it is contradictory to how market demands go and the gold rates go. So I think they do the balancing act there. I have stayed away from it.
Right. What is the worst investment you made?
I can't name it. It's a couple of stocks here, but
what made them bad?
I think we carried on to the hype around it, which was created even pre-IPO and bought into that story. And I think what I've come to learn out of
Was this in 21, those tech IPOs that...
No. I think before, I had matured before. This I'm talking about is around 2018, 17. And in that zone, I did make a couple of investments which were not so great. And I think I also got feedback on those investments at that time as well, that, you are betting too heavily onto this. But irrespective, I did it. But it was a good learning experience for me. Because then I started researching the fundamentals a little better myself. And when I realized that I need my own team, I can't just be relying on what people are coming to me and talking to me about. So
usually bankers, right? They
mostly bankers
come with slick presentations. What's the best investment you made?
Well, I think there are a couple, but I would still say my best investment is yet to come in a manner, because whatever I've done is very, very stable things. But on a disruptive side, I have not done that yet. But I think one stock which I have invested into and which has done far better than most people imagine recently has been Zomato.
Very contrarian.
Yes. And I do know that there is a lot of contradictory opinion about it right now. But say just today, where we bought it and where it is today, I think it has made its point reasonably clear. So if they're able to sustain the story that they are bringing onto the table, I don't see anything fundamentally wrong in terms of adoption.
So you bought it after it corrected in the IPO, after it was down?
Long before that.
Achha, long before that. Let's talk about your startup portfolio. So you actively manage one startup and you passively have invested in 6 or 7?
I got an opportunity from a friend of mine. Both of them were trying to build a startup, and one was an Ayurvedic doctor, the other was the lawyer, and he was the lawyer to both of us, and a friend also. So the lawyer friend asked me that, we both are looking at developing this as a business idea, and you come in with a food background. How do we make Ayurvedic products more commercial and more acceptable? And is there value to be created out of it? And that's where Herbie as a startup came into picture. And we spent about 2 years trying to figure out the right model where, say, into year
What
3,
year was this?
2021. So 2020-21 is where we started talking more about it.
This is deep pandemic.
Yeah, so this was just prior to the pandemic.
Huh.
So by the time we were ready on what we wanted to do, the pandemic was already
Huh.
there. So we had to change courses a bit. We learned that e-commerce is not as easy as we thought it would be post opening up. And I think now we've reached a point where, we've got a good mix of about 60% coming in from physical stores and distribution, and 40% of our business coming in from e-commerce. And I think we've now figured out a reasonable way where we know how much money we want to burn as a marketing cost to acquire consumers, what we burn to reacquire the consumers, and what we actually spend and what we earn out of it at a totality level. So where now we are comfortable launching new product ranges also around it, because first product we did was herbal infusions. Now we are coming up with 2 new products which maybe you'll start seeing from about March in the coming year.
Herbal infusion as in tea, right?
Yes, but the difference is that tea has caffeine. Herbal infusions is free of caffeine.
I see.
So that was the big difference.
I see. And what kind of turnover does it now have?
What we're doing is about close to 8 to 12 lakh rupees a month.
Okay.
So when we started, we were at about 1-2 lakh rupees a month. And what we are looking at now is that with the new product line coming in, we want to retouch about 20 lakh rupees a month, where we want to try and hit a new round of valuation and actually raise more money around.
And the other startups that you passively invested in?
Yeah, so couple of startups that I ended up investing into. One of them was into women's cricket, the other was into human resource management and performance management system, where I was actually a consumer first and an investor later.
Right.
Then one was about e-commerce, where that company was bringing many local business onto e-commerce, which also boomed at the right time due to the pandemic.
Right.
Then one has been into more on the life sciences part, where we're focusing on genetics and DNA, and what we've been trying to see is how we can integrate that into personalized nutrition in the time to come. And many other smaller investments that have been part of the angel network and the close friends network, and also part of the seed investment rounds around it. I think that has been a fairly good journey. What I've also come to realize around it is that it's also fairly time consuming compared to the likelihood of success.
Right.
And I think if you're investing at that stage, it is a lot to bet about on the person rather than the idea. Because having ran a startup myself, we've also come to realize that pivots are part of how the startups are growing. And it is the conviction of the entrepreneur what that matters really crucially in the first 5 to 7 years, in terms of being flexible and agile and rigid at the right time and the right requirement, which sustains that startup to a certain period. I think if they are able to sustain that, then the valuation really starts multiplying at a faster rate, just like how investments compound. So you have to be patient around that, which is where I think I have now shifted towards VCs.
Achha, so you don't directly invest in startup?
Over the last year, we've taken a conscious decision to take a position which is about holding rather than investing more. We're trying to build a value around the current startups better, so that we are able to take them up to a different vertical. Especially one startup which we've been invested into is into the fresh foods using hydroponics. So there is a lot of value that we realized as we pivoted the business model that was being created. So we are investing time and energy into building that better. But what I've also seen now is that the way the market has matured and my time requirements in other lines of businesses, sometimes hand-holding the entrepreneurs is always not a luxury that I have. So I need to limit that somewhere, is where the transition towards investing into better, bigger funds came into the picture.
So now you go through VC funds, and the overlap between your family office and your personal startups is roughly how much?
About 85%.
Right.
There are about 15% which I have considered as a personal investment right now. They're maybe smaller, or there is a conflict which could happen in terms of how the family wants to look at that as a business. So some things that we've stayed away from, and something where I have committed at a personal level because I like the entrepreneur and the idea into it much better. But maybe as they integrate better, the family office might take a position.
Do you consciously think that when you do pick startups, of course now it's a thing of the past, but did you have this thought that it should not be in food, it should diversify you away from food, or you look for synergies?
I look for synergies. I look for possible engagement avenues where collaboration is possibility. And we've come to benefit from it certain times, especially when it comes to sports, where we've got to work with a lot of athletes, where nutrition is a very crucial part. And over the last 10 years, the investment into sports has become so high, and the money around it has also become so high, that they are the ones who are having the access to the best dietitians and nutritionists than anybody else. So working with them is something that is actually a great learning for us. So that way, that collaboration is where I try to build that picture where, the playbook or the model around it is that, how do we build more channels which integrate with each other back and forth and collaboratively both stand to learn out of it. And if there is a possible good channel that develops bigger, that can be integrated into the Chitale ecosystem even further.
So the theory goes that if you invest in 6, 7 startups, whatever, 10 startups, then out of that one should do so well that it compensates for the remaining 9. Do you see that playing out?
That's why I was okay not getting into more startups, and trying to spread too thin around it, because the 2 that we exited did take away the load of all what we possibly could lose.
You've recovered your entire investment. It's great.
So that's true, and I think doesn't happen unless it is designed or thought of through. So having that right kind of advisory board around it, where you are focusing. At times, I would say obsessed with those numbers and what to make out of those numbers. That really helps us keep discipline around it.
One final thing, as a Punekar and as a business, running a business that's so connected with the city of Pune, is there anything that you would say you've learned or some advantage you've derived from being here and not in the noise and the market talk of Mumbai?
I think I have come to appreciate the cultures of both Mumbai and Pune very well. But what I've come to appreciate from Pune is that as a culture, we've accepted that there might be, it's like being on a highway where somebody is going to try and overtake you all the time. And somebody is going to be slower than you all the time, where you have to navigate and overtake them. So if you have to see, Mumbai is the fast lane on the highway and we are probably the center lane on the highway. But the kind of average speeds we have on most highways, the difference is maybe 2 or 3 minutes. Is it worth rushing those 2 or 3 minutes all the time? Is a choice that we have to make. So consciously, I think things have been okay about it, and whenever required, we can push the accelerator, but keep some breathing space inside is what I've come to appreciate from Pune.
Indraneel, thank you so much for your time. It was lovely talking to you.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.